Hello everyone and welcome to Darko Stocks. So today we are going to discuss a penny stock idea, and a lot of users have been waiting for AB Capital, the upcoming IPO of Aditya Birla AMC. So that is what we are going to discuss at the end of this presentation. And so we are beginning with the penny stock idea that we are going to present today. So this is the flow of how we are going to proceed throughout this entire presentation. First, we'll be beginning with the introduction about the company, a short history about the group, what the company operates in, the business that company is into. We'll be diving deeper into financial aspects, and the most important thing, the auditor's report, which most of the people don't focus on these days, and the sectorial outlook, and at last the future outlook and conclusion. And apart from that, after that, we are going to discuss more about the Aditya Birla Capital and AB Aditya Birla AMC, the upcoming issue that is going to begin. So starting with the name of the company, the majority of the people are interested in the name of the company. So here is the name of the company. The name of the company is Cesc Ventures, and we have basically suggested Cesc Ventures twice on Darko Stocks. The first time we had suggested Cesc Ventures was basically back in 2017 when the company was undergoing a significant amount of restructuring, that is the demergers and acquisitions. And apart from that, we have also suggested the stock back 2 years when the stock was trading somewhere around 600 rupees, and since both the time the stock has delivered very good returns. Now this is the one, this is again we are suggesting this stock. The reason for this stock is that although this stock trades below 100 rupees, it exactly is not a penny stock idea. Basically the market cap of the company is around 11,000 crore rupees, so it would be not very wise to say that the company is in fact a penny stock idea. Now, beginning with the company, we'll be starting with a short history about the company. Am I audible? I'm not able to get any messages. Am I audible over here? Just a minute. Yeah. Okay. Yes. Okay. So now let us begin. Actually, basically, this operates with a 5 or 10 second lag, so I'm getting a message is a bit delayed. So yeah. Now. Mhm. So CSC Ventures is basically a more than 100 years old company and a part of Kolkata-based flagship group of RP Sanjeev Goenka. RP Sanjeev Goenka is probably one of my favorite group in India because we have suggested RPSG Ventures from this group, and it turned out to be very excellent company, and the stock has delivered more than 200-300% returns in just few months of time. So it is one of the most dynamic and most aggressive groups currently in India. With a small history, the RPSG Ventures the CSE Ventures date its history more than 100 years old. So company was established basically more than 100 years old in 1897 when Kilburn and Company secured the Kolkata Electric Lighting license as the agents of Indian Electric Company Limited, and soon it was changed its name to Kolkata Electric Supply Corporation. However, the electrification in India was a bit slower, so it took place. It took almost 17 years after the electrification took place in New York, and almost 11 years after the electrification was taken place in London. So in India, everything operates on a very slower scale. So that is how the electrification process happened in India. In 1997, the Sunday Times of India gave the highest rating to CESC Calcutta, 10 out of 10 on power position when compared to other metropolitan cities of India. So that is what signifies that this is a really good, efficient company operating in India. Now, coming to the business of the company, CESC Ventures is basically a fully integrated power utility company with its operations spanning the entire value chain. Right from mining the coal, the company is engaged into generation of the power as well as on the distribution of the power. Company currently serves more than 3.4 million customers and is spread across 567 square kilometers of Kolkata and Howrah. The company has private participation in generation, transmission, and distribution of electric power via its own coal minings and the company. I'm not going to the details of the plant specific, like what plant load factor the company operates, or at what capacity the plants are operating, because that gets a bit more technical, and we are very small investors. So as a small investor, we don't need to worry so much about the technical aspects of the company. The company is doing good, the management is strong. That's what we are concerned with the most. Now, moving ahead, the system comprises of basically 474 kilometers circuit transmission line and 105 distribution centers with 8,211 circuit kilometer high transmission line. So basically there are two types of transmission line: low transmission line and high transmission line. High transmission line basically caters to industrial units as well as the housing units, where there are very significant amount of power requirement in the housing sector. Now, the company, the why we have suggested this company is what we are going to discuss on a bit later part, where the company is going through the significant amount of sale, merger and acquisition transactions with the another company. But before move that, we will like to give a short history about RP Sanjeev Goenka Group. So what is RP Sanjeev Goenka Group? These are the group companies of RPSG group. CESC is the first company that we are suggesting in this sector, and there are various other companies as well, as Philips Carbon Black, RPSG Ventures, Saregama. Shares have like moving crazy, like they have from 700 or 400 levels to they have moved to 300 and 3,300 rupees. So that is what signifies that the company is moving aggressively in this sector, and and there are so many other companies that the market, the management is trying to cater. Hmm. Okay, now coming to the most important aspect, the sale of wind assets of CESC Ventures. The company has recently announced that. Just be going, just a minute. Yeah, the sale of wind asset. Now, company has recently announced that it is going to sell its wholly owned subsidiary Surya Vidyut Limited to Torrent Power, under which the Torrent Power has entered into a special purpose agreement for 100% acquisition. The 156 megawatt wind assets used to yield 9 to 10% IRR for CESC. The rationale for selling this core asset to the Torrent Power is that CESC aims to grow its distribution business and move away from the renewable energy business. Thus, by selling these assets, CESC will receive a huge value, which is higher than one ascribed to these low IRR assets. So, company is going to receive a very large sum, and it is significantly premium to what the company's what the actual price or the book value of the company should be. Probably around 1.2 or 1.3 times the book value of the assets that the company is selling. The next thing is that this estimated sale value of this entire asset is going to generate 790 crore rupees. Thus, in total, CESC should receive around 315 to 320 crore rupees, because the company holds significant stake in these assets. Overall, the transaction is going to be a big boost for the company, because the company will be flooded with the liquidity, and since the debt levels in the electric utility company are very high, it can be more beneficial for the electric utility company to reduce its debts or to increase its margins. So debt is basically not a concern in electrical utility companies, where significant, if you check most of the companies, they have significant amount of debt on their balance sheet. So debt should not be a big concern. I'm just getting a comment that company name is not in SS and NASC. Okay, it is the name of CESC. CESC is the name of the company. Now moving ahead, we have just covered the sale of wind assets and the transaction. That is why we are going to suggest this company once again as a penny stock idea. If company has given 4% compounded sales growth, so like utility companies are not much on sales growth as well. However, the compounded profit growth rate is 13%, which is very good and quite stable. If you look at the market, then over a longer period of time, the company is not going to give you phenomenal returns, but company is definitely going to provide you a stability to your portfolio. Say for example, if the market tomorrow takes a dive of 10% or 20%, then CESC should provide a stability to overall portfolio. However, if the market takes if grows another 10-20%, CESC will not be growing another 10-20%. So that is one thing that you users need to keep in mind, that buying this share just because it is trading at less than 100 rupees is not going to fetch you multi-bagger returns. Also, the company is a very good dividend yielding company. Therefore, what happens is many of the times that company shares does not perform. However, the company gives significant amount of money back to the investors in the form of dividends. As a result, the stock price may not show significant price appreciation over the longer period of time. How and you can earn a very good dividend yield. Now, coming to the financials, the company financials have increased, the volume in the standalone businesses have increased by 4%, that is on year-on-year basis. However, transmission losses in FY21 have declined to like 8.35% versus 8.9% year-on-year basis. On a consolidated basis, the total income of CESC was 11,874 crore rupees, which was like 4% lower than the previous year. One of the reasons that company gives for this is that last year around March to June there was a pandemic and there was a complete lockdown in the country. As well as a result, the entire activity, manufacturing activity in the country were halted. Therefore, the company was not able to realize the better returns. But however, now management is very much optimistic going ahead. On consolidated profit before tax, after regulatory income remains stable, that is around 1752 crore rupees, and profit after tax in fact grew by 4% to 1363 crore rupees. For the quarter ended first quarter FY22, company has given a very good performance. That is, the net sales of the company were at 30,216 crore rupees, which were like 32.89% up from 2,420 crore rupees in 2010. So this shows that last year there was a significant effect of COVID-19 on the company because of the halting of manufacturing activity all around the nation. Moving ahead, so yeah, the Yeah, so company has a very good amount of cash balance as well as the debt balance is very high on the balance sheet. But as we said, that utility companies, most of the utility companies do have significant high amount of debt on their balance sheet. Therefore, that should not be a big concern. On a year-on-year basis, if we check, then cash balance has also increased significantly. Like not major detail, but company is maintaining good cash balance, and that can be sufficient to cover its entire interest coverage ratios and the interest payments as well as that. Overall, the reserves of the company have also grown very good over a period of time, and there has been recently the company has announced that the company is splitting the share value from 10 rupees to 1 rupees 1 rupees face value. Therefore, if you are holding 100 shares, then your probably the stock should be get 10 times, so the price is going to be remain same. However, after the recent split in the share price, there has been a dip in the market price because many of the investors might be booking profits. So in short term, there can be high amount of volatility. Overall, the company is very stable, and going ahead, it can be again back on the track. Coming to the sectorial overview of the company, India and other global markets experienced significant disruptions in the operating result from uncertainty caused by worldwide outbreak of coronavirus last year. The COVID-19 has disrupted the global energy sector, not just by affecting demand in short term, but also by accelerating the global energy scenario ongoing, structural shift in fuel mix and technologies. Going ahead, coal, oil, and gas will continue to be dominant, though their share in global energy demand will come down significantly from around like 81% in 2019. It is expected that it will come down to 73% in 2040, and this can be primarily due to the push of renewable energy, which will contribute around two-thirds of increase demand between 2019 and 2040. So the entire world is shifting from the non-renewable energy to renewable energy, and this is going to be the future. But however, we don't need to worry about that because still the non-renewable energy is going to command like 73% of the global output of electricity. Now, a considerable part of rising global demand is going to come from India and China, and that's for a fact that we all know that India and China are going to be one of the biggest economies in the coming period. Going forward, there would be improved power demand, which would result in higher plant load factors for power generation companies, improve incentives for the companies. Also, the power generation companies are likely to reduce FY22 as an economic recovery, which would result in like more receipt from the customers. What happens is that previously the customer were stretching their payments to the companies, and as a result, now when economy is going back on the track, the customers are going to pay what they have not paid earlier. So we can expect that there can be reduce in the receivables for the coming period. The company is expecting a very normalized profit, and very management is also very much optimistic about FY22 as well as that. Now the sale of this energy business is going to generate an additional amount of cash on the balance sheet. We are not sure that how the company is going to utilize this cash, and what would be the further effects of this cash on the balance sheet, which we'll be covering on a later part, because we have no idea about that. And instead of giving you wrong assumptions or wrong information, it would be wise that we would say that we'll be covering that in a later part. And That's it for the CESC. And the CESC, and the what can conclude is that CESC is a very stable company, and from the standalone regulation, with a regulated power company and engaging distribution business, the company has an ROE of around 15.5% on generation assets and 16.5% for distribution assets. So if we can assume that the company is going to grow at like 10 or 11% CAGR for the coming period, it could be a very decent profit generating opportunity for the company. And users can like be very not aggressive in just buying this share, but however you can hedge your portfolio in terms of stability for the coming period. Also, most of the people have been repeatedly requesting about penny stock ideas, and once again we would like to tell that penny stock ideas does not mean that just because share trades below 100 rupees it is going to fetch you significant amount of returns. So that is one thing that we would like you to keep in your mind, and do not jump into buying this company. Now, moving ahead, we would like to discuss a very important aspect. Although we should have discussed this aspect on the first, on the prior to the concluding the at the concluding the presentation, because this is a very important aspect and majority of the people have no idea how to deal with this. So we are going to explain you the what actually you should do before you start researching about a company. A lot of people are like reading financial statements, trying to analyze the balance sheet. They're going through numbers, crunching numbers, estimating forward earnings, future discounting future cash flows. But you need to understand what actually you are doing is not at all useful if you don't understand the fundamental aspects of how to perform a research. The first and foremost thing that you should understand is that before you start researching about any of the company, you need to understand what the auditor has said about the company. If auditor says company is not in a position to show you the true and fair view of its financial statements, what you are doing is completely useless. The company has not presented the balance sheet or the financial statements which actually it should be, and you are performing financial analysis and assumptions on that numbers, which is totally which is not fruitful at all to perform any kind of research. So today we are going to explain you that what actually you should be doing when you are starting to research about the company. I'm just switching the screen, just a minute. Just a minute, what has happened? Not able to sure. Okay, so this is the independent auditor's report. When you scroll down to page 98 of the annual report, you'll be finding an independent auditor's report. Now, independent auditor's report is a very important aspect in understanding what the financial statement actually mean and how do you go forward with the financial statements. When you are starting with the financial statements, you need to first understand the management is in a position that they have displayed the financial statements very clearly or not, or is there any kind of like misinformation that they have presented in the financial statements and users are not aware of the thing. So you need to take this thing very seriously into consideration. You should start by reading the independent auditor's opinion and what the independent auditor has to say. Mostly management may be in a position to say conceal some facts and auditor may not be able to find the thing, but overall he may be explaining you that the financial statement does show true and fair view, and if auditor has clearly stated that, then you can say that the financial statements are reasonably well stated. We'll go through some of the important paragraphs and I've highlighted some important aspects you need to find into the auditor's statement. See, for example, we have the audit. This is the auditor's opinion, and this is what auditor has to say. We have audited the company financial statements of CESC, which comprises of balance sheet as of March 31st, 2021, the statement of profit and loss, including the statement of other comprehensive income, the cash flow statement, the statement of changes in equity for the year ended, and notes to additional financial statements, including summary of significant accounting policies and other explanatory matter. In our opinion and to best of our information and according to explanation given to us, the aforesaid standalone financial statements give the information required by the Companies Act 2013 as amended in the matter so required and give true and fair view. This true and fair view, what the auditor is saying, is very important thing in understanding that financial statements show actually the true and fair view in conformity with the accounting principles generally accepted in India of the state of affairs of the company, its profit, including other comprehensive income, its cash flows, and changes in the equity for the year ended on date. So basically, auditor is saying that the company is showing true and fair view. Now there are significant amount of other companies, and I'm sure you might have never read this audit report, but we have come across so many companies where auditor itself is saying that management is not disclosing proper information to us, or management is not giving the complete picture, and as a result we are not able to confirm that the financial statement of this company are giving true and fair view. So you need to start with reading the audit report. Forget the financials, forget what the company is into, what the company is doing. If the management is siphoning off the money from the company, or if management is not showing true picture of the company, it is irrelevant if you are doing any kind of analysis of the company. And you need to start with audit report, and once again we are emphasizing this because over the past several months or several years we have got lot of queries from the users asking about so many companies, and when we check their audit report, the auditors clearly say that management is not disclosing the true picture. Then why are you investing in these companies? So that is one of the biggest questions that you need to answer. Now this is what the basis of opinion is based of the auditor. So auditor has based his opinion, like they are given the reply that we have conducted our audit on standalone financial statements in accordance with the standards of auditing as specified under section 143 of the act. So what is the basically auditor's responsibilities? Auditor's responsibility is to verify or check the financial statements that are prepared by the management. However, management prepares the financial statement. So that is a very important thing to understand. Management prepares the financial statement, auditor only verifies it. Plus, auditor has a very limited time to verify the financial statements. He cannot go into like genuineness of each and every transactions, why the management has paid 10 rupees or 10,000 rupees or 1 lakh rupees to these people, and why is so much amount of outstanding on the balance sheet and so much amount of cash on the balance sheet as well as the cash on hand. So management is not going to go into extreme details. He is going to verify the genuineness of the transactions, and only that genuineness which management discloses to the auditor, not complete detail. Now this is the second important thing, key audit matters. So key audit matters are those matters that in our professional judgment, in the auditor's professional judgment, were of most significance in our audit of standalone financial statements for the financial year March 31, 2021. So these matters were addressed in context of our audit of standalone financial statements as a whole and in forming opinion thereon, and we provide separate opinion for these matters. So what is this saying is that key audit matters are the matters that auditor has faced during his audit. For example, if auditor wants, say, cash book of the company, he would request the management or the person in charge to give him the cash book of the company. Now what happens is sometimes that there may be significant wrongdoings in the cash book, so the person who is in charge may not be able to show the exact cash book to the auditor. So what he does is he delays that we will be providing you in a 1 week, we'll be providing after 2 weeks. So auditor notes that this man or this so and so person is not disclosing these details or information, or he is taking significant amount of time in disclosing those details. So auditor mentions those matters under key audit matters. His communication to the management that so and so type of miscommunication has happened and so person has not disclosed the information that we are required, and based on that we are forming this opinion. If auditor is not able to verify what he is basically the genuineness of the cash balance or cash transactions, then he might have mentioned it here that although we are giving true and fair view on the financial statements, but the cash balance is not very good, it's a very doubtful matter, we are not able to verify because of so and so actions. So here what auditor is saying, that first matter, for example, is that accrual of regulatory income and other corresponding asset. So what was the matter? That the management exercises judgment in estimating such amounts using past experiences. Many of the financial statement items are based purely on judgments, and there is no standard or no significant fixed amount that we can say that this financial statement or this item should be measured at this valuation. So what auditor does is that he says that this is the so and so matter that management has used their own judgment, and we are not sure that this judgment should be actually be there or should actually not be there. However, auditor is responsible for verifying that although management is expressing this judgment, have they followed proper procedures, or is judgment based on some assumptions or not? And that is how he says that how our audit address the key audit matter. So how the auditor has taken various steps to make sure that no, the management's estimate is definitely what management is saying, but we should also verify what the management is saying. So the company is the auditor has considered the company's accounting policies which refer to accrual for regulatory deferrals, and this is basically Indian accounting standards regulatory deference accounts. So the auditor is like checking that is it in the conformity of those standards. Then we have understood that carried out testing and design of implementation of key financial controls related to accruals of regulatory balance and disclosures in financial statements. So these are the various matters that auditor is saying that we have verified this and this and this and this, and then we have come to conclusion that what management has made in estimates is definitely that we should consider. One of the important matter is that investment in subsidiaries as cost. In India, we follow up till now we are following accounting standards, and now we have recently changed to Indian accounting standards. So basically, what happens is that we have in past covered so many companies, for example, Tata Investment Corporation and Bajaj Holding and Investments. So what happens is these kind of companies, that these companies are holding significant amount of investment in other companies. Now, as Indian standard states that you have to say show your balance sheet or your historical financial statement at historical cost. Now what happens is that I have purchased the shares of Tata Investment at 300 rupees. Now even after the shares have been growing at 1200 rupees, in my balance sheet the Tata Investment is going to be shown at 300 rupees. So this is how the companies are trying to escape the actual book value and not able to show the real valuation to the users. Users need to go into the depth of the balance sheet, and you need to find out on your own that does this cost actually is 300 rupees or it has moved to 1200 rupees and management is not revaluing. So what happens is if management revalues, then definitely their share price is going to increase, but most of the times management is not interested in showing you the real value of their company, because ultimately you are buying the shares from their own pocket. So what happens is that if the company price moves from 300 rupees to 1200 rupees, that is the part of the amount that if you are holding a share is your gain, not the management's gain. So they are basically not very much reluctant, and we have seen in so many companies that balance sheet are shown still at historical cost, not at the real fair value. So this is one of the audit matters that auditor has highlighted, that investment in subsidiaries of the company. The company carries its investments in subsidiaries at cost and performs as impairment asset assessment whenever required as per applicable Ind AS. For this assessment, the company involves a valuer to determine the recoverable value of such investments using the discounted cash flow method of valuation. This is the method that management has been used, and the management has appointed its own expert to value such investments using discounted cash flow method of valuation, which is highly sensitive to changes in inputs used in valuation. So this is one of the important factor that auditor is highlighting, and involves judgment due to inherent uncertainty in the assumptions used for forecasting future cash flows. So this is once again auditor is highlighting that there may be some issues with the actual valuation that the company is showing in its balance sheet, the valuation of the subsidiaries. And what as an auditor has done, because auditor, there are so many methods. If we appoint another expert, then he may be able to come with another different valuation. If we are going to appoint another auditor or another management expert, he may be coming up with another valuation. So this is very important factor, that each and every expert may have its own valuation methods and its own valuation parameters, and which may give you valuation which may be significantly different from others. But that is not going to mean to say that this so and so expert has done valuation completely wrong, or this should not be valuation the value of the company. It is very wrong to say that. And that is how the auditor says that, okay, you are appointed your management expert, we are going to consider your valuation, but there are some of the factors or some of the things that we need to take into account before finalizing the financial statements and actually accepting the valuation report submitted by your expert. So these are the procedures that the auditor has performed. We have evaluated the objectivity and competence of external valuation specialists. So they basically say that the valuation expert that you have appointed is basically qualified enough to give you a valuation report. If, for example, the CESC is operating in a power distribution sector. Now, as a chartered accountant, he may not be very much familiar with what the plant load factor is, or at what efficiency the plant should be operating, and what should be the value of fixed asset, and what should be the turbine, and the hydrogen should be purchased at what cost, and if the company is holding hydrogen, what should be its value. So what management does is, management appoints an electronics engineer, or say power distribution engineer, or specific engineers, and they ask them that you value our plant, and you tell the auditor that this is the valuation of our plant, and this is the impairment that has been caused to the asset because of this valuation. So auditor does not doubt that the report is this, and this should not be the plant load factor, and this should not be the valuation of this and this thing. What he does is, he identifies that this is the person, he is expert, he has so much so and so experience, he is qualified by the government to be a valuer of the company, and the auditor says that, okay, the person has submitted this report, we will be accepting this thing. We discussed with the management methodology and assumptions using the valuation, including discount rates, expected growth rates, and terminal growth rates. So what auditor does is that he says that if the management expert has used a discounting growth rate of 20%, then he is going to question that why are you using 20%? We have checked the audit report and so many valuation reports of other valuers, and they are using 10%. So what is your rationale behind using 20%? If auditor feels that it is genuine and he has taken appropriate steps, and the management's expert is able to say clearly explain him that why he is using 20%, then auditor is completely fine. So these are the various audit matters. You can just go through them, one important aspect, and we will encourage you to read as many as audit report as possible, because before reading the financial statements, audit report is very important thing. Other aspects, that responsibility of management for standalone financial statements. So what is the responsibility of management? Have management proper controls in checks? Say for example, the person who is receiving the check is the same person is not responsible for making the entries in the books of accounts, and same person is not responsible for withdrawing the cash from the bank. So these are all the duties that the management has implemented or controls, that the same person is not carrying out various different functions, and make sure that there is no possibility of fraud in the management's internal control of financial statements. This is all this. The next shows that auditor's responsibility for audit of standalone finance. So what is the auditor's responsibility? Is that the auditor's responsibility is to obtain reasonable assurance on the financial statements that they are free from material statement, whether due to fraud or error, and to issue an audit report that includes the auditor's opinion. This is one of the very most common line you will be finding in all the audit reports. Reasonable assurance is not a high level of assurance, but not a guarantee that audit concern is accordance with standards of auditing that will always detect a material misstatement when it exists. So these are basically very common things. There are some points that you will be finding very new in every audit report. However, most of the points in audit report may be very common, because this is a standard format which every auditor of the company has to give to the management's balance sheet for issuing their audit report. You can go through this audit report once. This will be available in balance sheet, and this will be available in every company's balance sheet. Now this was all we wanted to talk about the audit report. Majority of the users are not reading audit report at all, and there is no point of us in posting audit report each and every week. However, what you can do is, when we try to present you with a company, you just go through their audit report once, and you try to understand that what the auditor is trying to say, and is there anything in that audit report which should be raising an alert in your mind, or doubts about the management of the company. There are significant amount of subsidiaries, and if you just scroll down to the subsidiaries, I just show you once what kind of subsidiaries are there, and why why the auditor has said that these are the subsidiaries that the auditor has used. So if you can check over here, that these are the kind of subsidiaries the management has, and most of the subsidiaries are unlisted subsidiaries. So it is very difficult to say to give a valuation to these kind of subsidiaries, and that is why the management has used an expert to show that they have carried out appropriate valuation methods and valuation of these subsidiaries. And if you check that majority of the subsidiaries are not shown the value over here, maybe some reason because that management have written off, or there is no significant amount of value to be shown in the balance sheet. So these are the significant subsidiaries, and that is why we wanted to highlight this one of the very important fact that users are not reading the audit report. Moving ahead, a lot of users have been asking about the statement of Aditya Birla Financial, Aditya Birla Capital, and its upcoming issue of Aditya Birla AMC. Now, since Aditya Birla Capital is around down like 5 or 10%, however, there is a big upside for Aditya Birla Capital users. I'm not going to go into the valuation details that you should subscribe to Aditya Birla AMC issue or not. But what I'm going to explain is that what is in the beneficiary for Aditya Birla Capital users. Just a minute, I'm just going to start to show you the red hat prospects of the company. Okay, so this is the draft prospects that company has filed with Securities and Exchange Board of India, and there is a separate section in that which shows that what is in it for the shareholders of Aditya Birla Capital. Is the screen visible? Just a minute. Yeah. Okay, so I'm going to go through all of these points, and I'll be explaining that what is in it for the Aditya Birla Capital shareholders. It may be wrong that I may be completely understanding this in a wrong way, but however, users are requested that once you understand this, you please try to verify it from your own source that that is what we have understood is correct or not, because this is very technical aspect, and there may be a lot of different interpretations if we are not clear on that. So bids under Aditya Birla Capital shareholders reservation portion. So there is a special portion for Aditya Birla Capital shareholders. So if you are a shareholder of Aditya Birla Capital, I don't know exact date, the cutoff date on which you should be shareholder. So if you are a shareholder of Aditya Birla Capital, you can apply for Aditya Birla AMC IPO via shareholder category, because normally what we are doing is, if we are making an application, we are making an application for less than 2 lakh rupees. However, when we are applying for shareholder category, there is a separate section. When you go to IPO settings, you'll be finding that you can also apply for shareholder category. So if you are a shareholder of the company, you will be automatically be eligible for that category. The page number for this is 336 of the prospects that company has filed with SEBI. I'm going to go through one of the all the points, and we'll be covering each and every aspect of what the company is trying to say for the shareholders of Aditya Birla Capital. Okay, the first 3 points, shareholders. Okay, this is the statutory reads. The main thing starts from here. The bids by Aditya Birla Capital Limited shareholders in Aditya Birla Capital shareholders in Aditya Birla shareholder reservation portion and in net offer portion shall not be treated as multiple bids subject to applicable limits. So what he is saying that Aditya Birla Capital shareholders can apply for Aditya Birla Capital shareholders reservation portion and via retail participation as well. To clarify, an Aditya Birla Limited shareholder bidding in ABCL shareholder reservation portion above 2 lakh, that is above 2 lakh is basically for HNI users and high net worth individuals which are applying beyond 2 lakhs to significant any amount which they want to, can bid in the net offer for up to 2 lakh rupees. Otherwise, such bids will be treated as multiple bids and both the bids will be cancelled. So what it is saying that if you are a shareholder of Aditya Birla Capital and you are applying to the AMC IPO via shareholders reservation portion, and you are also applying via HNI status, then both of your bids will be cancelled. You cannot apply twice in HNI category and in shareholders category. You cannot apply in both the categories. You have to apply only in one category. Now, moving ahead. However, if an ABCL shareholder is bidding in ABCL shareholders reservation portion up to 2 lakh, application by such ABCL shareholders in retail portion or non-institutional portion shall not be treated as multiple bids. So this is one of the key points. Therefore, ABCL shareholders bidding in ABCL shareholders reservation portion can also bid under net offers, and such bids will not be treated as multiple bids. So you as an Aditya Birla Capital shareholders can place 2 bids. one from shareholders category and one from retail category, where you have to post your bid less than 2 lakh rupees. And this is very uncommon knowledge, and I have so far not able to verify this thing, that how to apply for this thing, because this is also first time that I have read actually, that you can apply from both the bids, and your both the bids are not eligible to be cancelled. Now, what is the allotment status if you are applying for shareholder category? If the aggregate demand in this category is less than or equal to 19,44,000 equity shares at or above the offer price, full allocation shall be made to ABCL shareholders to the extent of the demand. So you are applying in ABCL shareholder category, and majority of people have not applied in this category, then you will be eligible to get full allocation of this category. So for example, you have applied 20 in shareholder category and 20 in the retail category, then your shareholder category you will be getting 20 shares. That is fixed. Now, there is an unsubscribed portion, so it is not very relevant at this point. However, if the aggregate demand in ABCL shareholder reservation portion is greater than 19,44,000 equity shares at or above the offer price, the allocation shall be made on proportionate basis. Now, as far as my understanding goes, it says that if you are applying in a shareholder category, you are sure to get the share, because it is mentioned the proportionate basis. What proportionate basis means is that, for example, if someone is applying for say 50 shares and someone is applying for 100 shares, then he is eligible to get what he has applied. So 50 shareholder is going to get 10 shares and 100 shareholder is going to get 20 shares. So this is very important point. However, please once again verify this point, and please also do let us know that if you come any irregularities or say we have understood wrong. But as far as our understanding goes, you can apply in both the categories, and you should definitely get shares of Aditya Birla AMC if you are applying for shareholder reservation. ABCL shareholders bidding under ABCL shareholder reservation portion are entitled to bid at bid or cutoff price. So that is, you can bid at bid point and cutoff price. So this is one of the very important point. You can apply for both the categories, and you can say it is most probably sure that you will be getting some shares if you are applying via shareholder category. And if you are also applying for say another category, that is a retail participation, chances are if you get say bid in a like lottery system, then you may be benefiting, like you may be having two lots of Aditya Birla shares. So this is one of the very important aspect that which we wanted to cover. Aditya Birla shares. If possible, in the next week when the issue opens, we'll be try to show more light about what the valuation should be, and if you should subscribe to the IPO or not. And if we get even more information about how to proceed with this kind of application, we'll be also showing you that how we can proceed with this kind of application. So that was all for today. Now once again, please remember that penny stocks are extremely risky. Although in past so many penny stocks have performed extremely well, does not mean that these stocks are going to perform well. That is one thing you need to keep in your mind. And a lot of new users have been asking us lately for the performance list, that what is the performance of dark stocks and how can we get the list of all the past recommendations. So those who are new users, you can wait, and for the older users, if you want to leave, it is completely fine. We'll be also answering 5 or 10 questions from the chat just after we show you the dark stocks dashboard feature, and which most of the users are not very familiar with. So just a minute, let me show you the dark stocks dashboard on the screen. So this is the research report, and this was actually password protected, and we'll be sending you the message shortly with a detailed research report. We have tried to cover, this is one of the newest aspect that we have tried to cover in this report. We have shown all the possible ratios of the Cesc Ventures in today's report. We also tried to show you a peer group comparison of the CESC with various different companies in the market. Say for example, Adani Green Transmission, and what their current market price earnings. Basically, we felt that CESC is trading at quite cheaper valuations as compared to its peers. So you can just go through these images once from the report. It will be a lot more helpful. We also tried to show you the quarterly results, and if you check that the quarterly result of this quarter, that is June 2021, is far more better then the September quarter results, the June quarter results, because last year June there was a significant disruption due to COVID-19, and the same can be seen on the quarter result as well. So we also attach the profit and loss statement, the balance sheet, and the cash flows as well as that. The CAC, as we said, that company gives significant amount of dividends, and as we check that last year the company has given 4.5 rupees, that is around 7% or 6%, 6 to 7% on the dividend yield on the current market price, and which is very very good as compared to most of the companies out there. So you can just go through these ones, and this is the sectoral report, the chart, and the shareholding pattern as well as that. So that was the report. Now how can you access the Darko Stocks dashboard? So that is how I'm going to show you that. When you go to our website darkostocks.in, there is a separate section called dashboard over here. So when you go to the dashboard, you will be redirected to this page, and when you click on this go to dashboard, you will be redirected to the model, where you will be shown how to log in. You have to log in with your Google account. Since we are already logged in, I will be showing you the dashboard directly. So this is the dashboard and how it looks. In the previous Google Meet session, we have already covered this dashboard, what are its features, and I will be giving a short brief, not more than 2 or 3 minutes, about what this dashboard is and what differentiates Darko Stocks and all of the other advisories out there. So basically, this is the first chart. It shows about the bifurcation of the stocks. So for example, we have suggested some stocks and it has gained more than 20%. So it shows the bifurcation that so and so stock have, for example, more than 150 stocks we have suggested over past 3 years. So for example, of 150 stocks, 36 stocks have delivered return about 20%. Say more than like 57 stocks have given return about 60%, and those are the stocks which are trading in negative territory. This is the basic statistics of what the Darko stocks have performed. So this is overall performance report, how many are gainers and what are the losers. So there are like 139 positive gains and 11 negative gains. This is the number of companies that we have suggested from each sector. Say pharmaceutical companies, 6 companies from pharmaceutical sector, engineering and heavy sector companies, chemical sector. These are the number of companies that we have suggested. This overall performance shows the overall performance of all the Darko stock ideas. Say for example, the best 5 performance of Darko stocks, Hinduja Global has delivered like 333% returns. You can check the exact date, the July 7th. The date may be plus or minus 2 days exactly because of some error. You can check this date, and you can check the price on the date of suggestion, and you can find that this has genuinely this has delivered this kind of returns. We have also mentioned these companies in Telegram group, so you can also search for the name of the company in Telegram. These are the loss records, the companies that are trading at losses. Please do not jump into the companies that are making losses, because these are companies are making losses for a significant reason. The reason might be that our estimates might have missed, or management comments might have said that the management is not expecting a good quarter or good performance for the next year. So that could be one of the reasons that these companies are not performing. Symphony, a lot of users have given queries for Symphony, and we significantly feel that management is not in a position at this point of time that they can give significant forward guidance. So the company is trading at premium valuations, and it is going to stay at these levels for the coming period. It is not going to move, and our bad performance is bad, and we don't want to say blame anyone else, because we might have missed some points and we are not sure what we might have missed. But these companies, please stay away from that. Thomas Cook is down because there has been demerger of Quest Corp from Thomas Cook. So that is the reason that company is showing 70% loss, but in actually the company has delivered like 25 or 30% returns. For daily records, here you can find the daily records, like you can just log into dashboard and you can see that which are the top performance every day. So for example, on Friday, Ambika Cotton Mills was the top performer. These are the top 5 performance of today, and these are the top 5 performance of each day. Daily records shows that. And here is what you can find, the all share value. This is the list of all the shares that we have suggested over past 1.5 year or 2 years from the beginning. You can check the date of suggestion, you can check the recommended price, that price which the stock were suggested, and the gains that they have delivered from that. These are all the filters available for this. Say for example, if you want to go into a reverse filter, say for example, if you want to check the top gainers or top losers. So for example, you want to check top losers. Okay, so these are the top losers in the decreasing order. So if you can check, there are very few losers, and there is no credit, or there is no none of us that we are taking the credit that we are doing some exceptional skills or we are doing some exceptional returns. The market has performed, majority of stocks are up, and there is no brainer. If you have purchased any penny stock, it might be also be up. So please don't say that we are not saying that we are claiming superiority over the other performance, but yes, we are claiming superiority because we are providing these things for free. You can check other advisories, they are charging 25-30,000, and when they are claiming that, that is significantly bad thing. They are very, that is very bad thing, and we hate this kind of thing. So you can check the worst performance. The Fermenta Biotech is basically we have recently suggested, and we feel the company is good, but somehow the management in recent annual conferences have said that they are not expecting a drastic increase in the sales and net profitability in the coming period. So that is the reason the stock is down, but we are expecting that the stock to perform from the next year second quarter onwards, and please remember, all the dark stock ideas are for long term. If you just click on again, you will be finding the top gainers, and these are the top performance, and so far more than 50 or 55 stocks have delivered 100% returns. Of total say 150 stocks or 151 stocks, two or three maybe up or down, or 150 stocks, almost 50 stocks have delivered 100% plus returns. So there is also a search available over here, and recent search, for example, Birla Corp is one of the recent search, and we have suggested that company last week, Birlasoft, and you can see that Birlasoft has been suggested twice. Birlasoft, okay, and Birlasoft has been suggested twice. The first time, from the first time, it has delivered almost close to 100% returns, and it is also up 5% from the suggestion date of suggestion. So this was all for the Darko Stocks dashboard. Now, if you have any questions, please post in on the chat. We are trying to also answer your questions on the WhatsApp as well. But there are a lot of users that are asking for target prices. So that we would like to clarify one thing, that we don't provide any target prices, stop losses, or expectation. One of the key reasons that we don't provide such things is because it sets a basic parameter into the mind. You need to understand this. All these stocks are for long-term investment only. So if you are buying, say for example, 2 or 3 months, trust me, this is the market is performing good, so you are getting good results. But if the market is not going to perform, you will be, and you will end up with holding this stock for more than 2 or 3 years. So please buy this stock keeping into your mind that you are buying this stock for at least 2 or 3 years. And you can check our performance. Most of these companies are excellent companies, and they are going to grow significantly in the coming period. And also you should keep a booking partial profit, so if the stock takes a dive, then you should be secure that my capital is safe, my profit is safe, and I should not be too much worried. So that is one thing you need to keep in mind. And going to the chats now, we'll be switching to chats. So if you have any question, please post in the chat, and will try to answer 5 or 10 questions. And if you, apart from that, if you have any further questions, you can just send us on WhatsApp. And that would be all for today. So thank you for watching, and please, if you have any questions, please feel free to send us the queries.